Hello again, and welcome to my how-to series specifically geared towards mortgage processors. In this series, I am walking you through how to read and understand all different types of documentation for the financing process, from titles, insurance forms, appraisals, and many more. My name is Gina Waribi, owner and operator of Innovative Edge Processing. And in today's video, we're going to be going through how to review asset statements and showing you some examples of them. So let's get into what is an asset statement. It is a statement that documents your net worth. There are two different types of asset documentation that can be provided to a mortgage processor throughout the financing process. Those are liquid accounts and non-liquid accounts. We're going to be going through both of these accounts today. First, let's talk about liquid accounts. A lender wants to confirm that enough of your assets are liquid in case of a financial emergency that leaves you unable to make your mortgage payments. When life throws you a curveball that reduces your income, such as loss of a job, medical emergency, your liquid assets are there to help you pay your bills. Most of us has either experienced this or have seen it, especially with COVID. Here are some common liquid assets. They are checking, savings, money market, business checking savings, or certificate of deposits, known as a COD. Secondly, there are non-liquid assets. In addition to documenting your liquid assets, you can also submit proof of non-liquid assets, or assets that are harder to convert to cash, like cars, self-owned businesses, or any other material value like artwork or jewelry. Some physical non-liquid assets are usually referred to as fixed assets, meaning they can take longer to convert into cash and may experience a change in the value from the time since they were originally purchased, like antique furniture and some type of real estate property. While these assets may be harder to liquidate in an emergency, it can still be very valuable to a lender to be aware of your entire asset portfolio. Here are some examples of a non-liquid asset. They are stocks, bonds, mutual funds, retirement accounts, annuities, and even life insurance. So now let's get into the basics of how to actually read an asset statement. All asset statements must be reviewed and analyzed for very specific components, no matter if they are a liquid asset or non-liquid. First, we want to make sure that the document is clear. As we all know, borrowers can take pictures and send these over. They're not full and complete, or they come across fuzzy. Next, let's make sure that they didn't mark up the page, such as crossing off the account number or even the balances. We need to make sure that the bank name is on the statement. All pages of the statement are present, even the ones that are intentionally left blank. We need the account owner or co-owner to match at least one of the borrowers on our loan. We need to see all transactions, such as the deposits and the withdrawals, that are listed. We need to make sure the account number is present. It is acceptable to only have the last 4 digits of the account number on there, as long as you do have one full statement in the file so you can match the account numbers up. You also need to make sure that the account statement goes for a full 30 days. 1 or 2 months are required for most AUS findings. It is very important that you review all of the documentation you received. As you can clearly see on this statement, you can see that someone edited this PDF. What is this world coming to? People who commit fraud have become very talented and ingenious, as you can clearly see. So it's very important that we watch for these red flags to help throughout the mortgage process. We need to make sure that the statement is recent, that it is within 45 days of our application date. DU and LP both require quarterly statements to be the most available statement in the file. If they are providing you with a printed transaction history, you need to watch to make sure that there are no gaps in the dates. So for example, your printed transaction history needs to start with the last date of the last statement. For example, if the statement goes till October 30th, the printed transaction history needs to start on October 31st. You need to make sure the beginning and ending balances match up to the previous bank statement. There cannot be any pending transactions. On internet and branch printout statements, or interim statements, if the borrower is going to print them from online, you will need to be sure that they contain the bank name, the borrower name, and or the account number, so they can match it up to the statements on file. If they are going to go into a local branch to obtain these, please be sure to have them ask the teller to stamp and sign them to make them an official copy. So now let's get in a little bit more advanced on reading asset statements. Additional debt. The underwriter will review the asset statements to see if there are additional debts, especially recurring debts that are not showing up on the credit report. You can actually compare the deductions on the asset statement to the loan application and credit report to see if they're making any payments for other liabilities, and if they are, you will need to address that in a signed and dated letter of explanation. Now let's get into large deposits. If there is a large deposit and those funds are needed for your loan to meet the closing or reserve requirements, you will need to document the source of funds. If they are not needed, you can just back out the funds. To do this, you need to reach out to the underwriter or send in a signed and dated letter from the borrower stating what the funds were from and that they are not going to be used in this transaction. You can also add to that letter that you wish to have the funds backed out. Just a quick note, an unsecured loan, such as a personal loan, credit card advances, cannot be used in a mortgage transaction. What is a large deposit for conventional loans? A large deposit is considered anything greater than 50% of the qualifying income per month. That is not a direct deposit. For example, if the borrower makes $5,000 per month, you will need to document anything over $2,500. So for FHA, what that means is if the loan amount is over $200,000, any large deposit over $2,000 will need to be documented. For VA loans, there is no number. It is totally up to the underwriter's discretion. For USDA, the following deposits would be questioned: all payroll deposits if income is not already documented, any transfers from the originating account that has not been documented, and any deposit over 25% of the qualifying income. For example, if the borrower makes $3,000 per month, you will need to document anything over $750. If they make $5,000 a month, we would need to document anything over $1,250. It should be noted that if a large deposit is cash and cannot be documented, it cannot be used towards the transaction. For example, if the borrower has been saving $100 bills in an envelope at home for the past year and finally deposited them in bulk at the bank, we are not able to use them towards a transaction. This is because we cannot document the full paper trail. In these instances, the cash deposit will be needing to back out of the verified funds. If it's income, you will just obtain a copy of a paycheck. If it's proceeds from the sale of a property, the preliminary CD will be needed if you're selling it concurrently. If the property has already been sold, you'll need to get a copy of the final signed CD. If it's cash, a signed and dated letter, and receipts to correspond with it. If it's a transfer from another liquid account, you'll need to obtain a copy of the full and complete 30-day bank statement to source where that transfer came from. If it is in the middle of a 30-day cycle, you will need the full 30-day statement and then a printed transaction history starting with the ending date of that last statement. If you're going to transfer money from a non-liquid account, such as a 401k or stock, you will need to obtain a copy of the full and complete 30-day statement or quarterly statement before the funds were withdrawn so we can see the exact amount of money that was in there. You then will need a copy of the check or wire receipt to prove how much money they took out. You will need to go ahead and get a copy of the terms and conditions of withdrawal to make sure that the borrower was not penalized for this withdrawal. If they did take it out as a loan, you will need to get a copy of the loan details, such as the loan amount, the rate, and the payment. If the large deposit is a gift, you will need certain required documentation for that. Please watch my how-to video on the details of gift documents and how to read them. But for this purpose, if the large deposit is a gift from a close friend or family member, Fannie and Freddie require you to obtain a gift letter, a copy of a gift check or wire transfer. If it's for a government loan, you are required to have a gift letter, a copy of the check or wire transfer, and a copy of the donor's account statement showing the funds coming out. Why do you need the donor statement? It's just because the underwriter needs to see that someone, such as the borrower, didn't give the donor of the gift a bunch of cash to deposit into their account and then to gift it back to them. These gift funds do need to be seasoned. Well, I hope you enjoyed your how-to lesson on asset documentation. I do have several more coming out, such as titles, appraisals, and credit reports, so please keep your eyes out for them. Thank you so much and have an amazing day.